I've been in the telecommunication industry almost, gosh, giving away my age here, but right at 28 years. And this same company I founded, about 27 years ago, 26 years ago. And our former name was ATSI Communications. We specialized in, it was a telecom strategy. We specialized in international markets, capitalizing on deregulation, demonopolization that was occurring throughout Latin America with an emphasis on Mexico. We did really well, started the company from scratch, built it up significantly, and listed it on the OTC at the time, a bulletin board, I should say, for a period of time, and then uplisted the company to the American Stock Exchange and created about $500 million in market value. We also spun off a company, me and my current business partner, Craig Clement, who's executive chairman. We spun off a company by the name of GlobalScape, which actually, again, started from scratch, built it up, listed it on we took it public. It ended up listing on the NYSE under the symbol GSB. And then another venture that my business partner, Craig Clement, was involved in, XPEL is a recent success story. And I'm giving you all these symbols so you know the background of the management team. A lot of times people bet on the jockey, not the horse, right? And so we want to make sure that as investors do their due diligence, they see a team that's done this before, has built successful companies, and we're here to do it again. So XPEL was a venture that Craig took public about 15 years ago. He was instrumental in the early days of that company, and it's recently, gosh, it exceeded a $2 billion market cap. So if you look at all the combined, projects or ventures that we have, including the predecessor to Digerati, which is ATSI Communications, actually it's over $2 billion in market value that we've created. So anyway, leading into what we have today, Digerati Technologies evolved from that telecom strategy that I mentioned was focused on the international markets. We adopted VoIP, voice over internet. Early on, we were one of the first companies to do international VoIP in Latin America. And what happened, Laura, is over time, that became our business model today, right? We started with VoIP in the early days, and it became what we have today, which is a complete cloud communications, UCaaS, or Unified Communications as a Service business model. And why did we go down this path for the current strategy? Well, when we took a look at the landscape, we realized quite a bit. We could see that there was an incredible growth opportunity to serve the small to medium-sized business market. It was underserved. They had a lot of pain points. And we knew that we could really jump in with our technology, our capabilities, our knowledge base, and serve that customer well, which I'm a little biased, but I think we're doing a really good job. We're doing a better job than the incumbents. We're doing a better job than the national players. They've decided to move up market, right, to target more of the Fortune 500, Fortune 1000 company. And they left the small to medium-sized business behind, which is where we come in. The other thing we recognized as we looked at the market is that it was very fragmented, right? So interestingly enough, the companies or service providers that were doing a better job at serving that small to medium-sized business market were the local regional operators, small operators like us, right, that have targeted a market in Central Texas, Southwest Florida. And they had that local touch, Laura, which was really missing for that small to medium-sized business. That type of customer requires a high touch, right? They don't have an army of IT people, right, to go and do what they need to do to move to the cloud. When they think about moving to the cloud, they think of, oh gosh, who do I call to help get this done? And there's a lot that goes into that to help them really run their business effectively, right? Integration with other systems and things like that. So when we realized that, we figured, well, look, we've got a great opportunity with our pubco to consolidate some of these smaller regional operators that, quite frankly, are doing a better job than the bigger guys, and bring them all together under our pubco and create significant value, right? There's a huge opportunity. It's so fragmented. I mean, there's thousands of these operators out there. So that really is kind of the core to our business plan, right? It's both organic growth, targeting a high growth market, which, by the way, the market we serve is expected to grow from 36 billion today to about 167 billion in about 6 or 7 years. Explosive growth, right? And so that, combined with, again, tackling or consolidating in a very fragmented market, is kind of core to our business strategy today. And again, we have a management team that's been there, done that. We've done this before. We just have to execute, right? It's very straightforward. It's not rocket science. And so far, we've done a pretty good job. We've completed 4 acquisitions in the last 3.5 years, and we're just going to keep doing more of that. Yeah, so that's a very good question, and we think about it every day because this is why we're here, right? So again, that small to medium sized business typically does not have the resources. Again, the internal IT department or an army of IT people like Fortune 500 companies have to deploy a cloud-based solution, right? So they're going to look for a service provider that's going to help them kind of put all the pieces together, and that could include integrating with other systems they have. It could be a point of sale system. It could be a CRM system, and it's just not that easy, right? And so that's where we come in. And I think, really what I'd like for your audience, the members of your group to really understand is that that local touch is so important to this, right? And it's completely missing from the larger players, the nationals. And look, I'll give you some names. Ring Central, right? They've done a great job, built a behemoth of a company, right? I think their market cap is probably north of 20 billion, but they've left a small and medium-sized business behind. And we get a lot of calls from groups that say, I'm just not getting the support and that local touch that I need, that help I need from Ring Central. Can you guys help me? Absolutely. So we step in and help those kind of customers. So I think, again, what sets us apart is that high touch, local touch approach to serving our business customers. And again, we've got a growth opportunity there in that market segment. And look, a small business can have 2 or 3 employees, or it can have 1,000 employees. I should say a small to medium-sized business, right? I think small businesses are in the lower end of that, but we serve customers. We've got banks, financial institutions, medical service companies that are 2 or 3 or 400 employees, right? Would fall into that category. But back to your dilemma, that's exactly the pain point that a lot of businesses have, right? And again, I'm not going to say that Ring Central doesn't have a good product. They have a great product, right? But again, it may not be the right fit for you as a small business, right? Or a medium-sized business. And so we come in and say, look, we're going to match up feature set and functionality wise against Ring Central, right? We're going to match up just fine. We're going to give you everything they've got, but we're going to help you really move to that next level so that you've got a complete communication system that really works for your business, that really gets you what you need, right? And we do customization, Laura. We've had clients that say, hey, I really love the system, but I want to do this over here. And it could be a messaging application. We're the first to go out and say, hey, let's see if we can do that for you and help you, right? Larger companies aren't going to do that. They're going to give it to you right out of the box, right? And so that in itself is a big part of what we do. So back to your question, I think it was about our sales force. So another part of our strategy, which we believe is rather unique, is that we extend that local touch through our channel partners. Our sales approach is really enabling. You mentioned you work through an IT service provider. I guarantee you that IT service provider may not be properly trained on Ring Central, and they want to help you. They want your business, but they're just not properly trained on Ring Central to really give you the assistance you need. We developed a program early on around the channel program whereby IT service providers, MSPs, traditional PBX vendors, there's a lot of them out there, right? They come in, we enable them with the ability to provide our service to that end user, right? To that business customer. But more importantly, we train them with the capability to provide the training, the support that in your case, you might need, right? To really solve a problem for yourself. So we're extending that local touch through our channel program and channel partners. And that's a big part of our push today, right? So we have today, 8 channel managers, and they work with a variety of these type of IT service companies, MSPs. And again, we come in, the channel manager's job is to help train, onboard that channel partner so that they can provide that local touch, that support that's needed to make you at the end of the day happy, right? So that's a key part of our growth strategy. And every time we come in on an acquisition, we re-energize sales through the channel program that I just mentioned. The answer is yes. I can't disclose our plan and timeline. I can't go into that, but acquisitions are a core part of everything we're doing, right? So it's absolutely key for us to find and be selective about the type of acquisitions we make. Laura, we're very disciplined in our approach. It's very straightforward, but for us, we're looking for companies that smaller regional size that we're looking for, typically 2 to 10 million in annual revenue. Why that size? Because they're too small to attract a private equity group. They're too small to attract a larger pubco, but they're a perfect fit for us, right? And our strategy and our business model. We also look for companies that have done a good job of taking care of their customers and have lower attrition or churn versus the the larger national players. We're always targeting 1% or less on churn, which tells us that particular service provider is doing a really good job of taking care of their customer. And then third, we look at the technology stack. We're very disciplined right now about the technology stack that we go after in terms of that acquisition, because we want to integrate and create those cost synergies in a relatively short period of time. And the only way we can do that is if it's a comparable technology stack that we know and can manage. So that's the third key component to our acquisition strategy. So again, the takeaway is that it's a very disciplined approach to acquisitions. We're not just going out and buying revenue, right? That's not what we do. As you may have read, we closed that financing transaction alongside the acquisition of Active PBX and Nexigy, which were two key acquisitions for us. Those two acquisitions basically more than doubled our revenue and took us to the run rate that we are at today. Post Road, if you just look them up, you'll see that they invest in technology companies. They're in the TMT space. They also do some other, I think, real estate projects, but pretty good sized fund. They've deployed over $1 billion. They've done some neat things recently. Again, just all you have to do is Google Post Road and investments, and you'll pull up some recent companies that include data centers and other technology companies that are synergistic to us. It was key for us because prior to that, we were funding our acquisitions through a combination of friends and family, a financing facility that couldn't quite get us to where we needed to be to really roll with our plan. And so Post Road stepped up. Obviously, they did their due diligence right on our transactions, and you could see that we had a really good business model here. Obviously, they buy into our vision and our strategy on consolidating more operators out there. So it's really good to be able to have a facility where you can move quickly to closing a transaction once you've reached deal terms. Another key part of our growth strategy that kind of ties back to the M&A approach that we're taking is that, as you know, today we're on the OTC, and it's a tough market on being on the OTC. We have plans to uplist. We've been very vocal about that. It's a stated objective, and that is going to give us an additional currency beyond the debt facility. Obviously, having a stock on a primary exchange, that will give us the additional currency along with the Post Road financing to really move forward with our acquisition strategy. And again, we do not lack acquisition opportunities out there for what I've already defined. There's plenty of pipeline opportunity, and we intend to keep that pretty healthy as we go forward. My only point in that is that it's just really staying focused, right? Staying to what you know and what you're doing, and remaining on that track because the opportunity is there. Yeah, so I can't talk about that. I think the best thing to do is maybe have a follow-up interview after we make some filings, and we can talk more openly about that. But I just can't right now. But the timing of it, let's just say that if you go back to August of last year, August September timeframe, we hired Maxim Group. We hired him in advance of our transaction with Post Road Group and the Nexigy and Active PBX transactions for a reason, right? We wanted to kind of engage with them, help them kind of set the path for us prior to getting those transactions done. Those transactions were key, were a key milestone or combination of milestones in order to get us ready for an uplist. So we're well into the process. Let me just leave it at that. And once we have some disclosures and filings, we can come back and talk about that. But yeah, we're absolutely eager to get that behind us. I think reverse split. I'm sorry, you asked a question about that. Yes, there will likely be a reverse split, but it's going to be tied to another milestone. Okay, we're not just going to do it for the sake of doing a reverse split. There's a lot of companies our size that they run up the shares, they do a reverse split. They run up the shares. That's not us. That's not us at all. And so our plan is tied to that reverse, assuming we do it, is tied to a milestone that's a very key part of our corporate development plan and strategy. Our goal is to uplist the company in 2021. That's our goal. Let me answer it this way. We're about to disclose our third quarter numbers, so they'll be coming out here soon. The only thing I can say is that the second quarter it wasn't a full quarter of the transactions or the acquisition of Nexigy and Active PBX. The third quarter that we'll be reporting soon is a full quarter, our first full quarter with Nexigy and Active PBX. So we're looking forward to disclosing that financial information. And so I think you'll likely see some consistency on what we've disclosed before. With regard to the plan going forward, we publicly stated we're targeting 5 to 10% organic growth. Okay, that's no acquisition, that's strictly organic growth. And so, some of your audience may say, well, that's not super exciting. But again, that does not include acquisitions. What we're trying to do at our size, Laura, and this is again part of our disciplined approach, is we have to manage the resources at our size between the organic development of the company and the acquisition development of the company, right? Because every time we make an acquisition, what's really key is that we absorb that company, integrate, and realize those cost synergies in a relatively short period of time, right? Because that goes straight to our bottom line, it goes straight to our cash flow. As you know, the readers know, probably our audience knows, it's a recurring revenue business model. So you just keep stacking that recurring revenue that you have with contracts or under contracts with business customers, right? 1 to 5 year contracts. So it's a really good, solid business model, again, for what we're doing, because you're stacking that recurring revenue. And then if you're doing a good job of cutting those underlying costs through your acquisition integration, then you're going to produce some really good EBITDA results on a go-forward basis versus the peers that we have in the industry. We see a lot of that, Laura, in our industry. We see a lot of just buying the revenue, and that's not us. That's not us at all. And why should we, if we've got that so much opportunity to be selective with acquisition candidates that are out there? Again, it's just there's thousands of them out there, right? That fit our model, that again check off our boxes, right? And that we could go after. So why not just stick to that and be successful at it, right? And it's kind of a rinse and repeat approach, right? And that's what we're trying. And we learn every time, believe it or not. And the one thing I point out is that it's interesting. Even the smaller companies we acquire, right? We've made a few acquisitions where they're a couple of million, right, in revenue. We get a best practice out of it. We find something that they're doing different than all the other guys out there, because they're entrepreneurs. They go out there in their local market and they say, how am I going to beat out the other guy in South Florida, right? Well, they come up with ways to do it. And it's so neat because we come in, we obviously want the best people and we want the best practices, and we find things out. Active PBX is a good example, smaller acquisition. But they had an arrangement with NetSuite, right? Or they'd worked with Oracle for years to get in with NetSuite on integration, and it just opened up doors for them on the sales side. And so, it was like, wow, now we've got a partnership with somebody like NetSuite because of Active PBX, right? So anyway, things like that really come into play on everything that we're doing. Well, look, just to comment on earlier, you said you like getting involved with entrepreneurs that founded the company, and been at this a long time, but I am so excited about what we're doing here. I'm just excited about it because you want the stars need to align, right? Both on your strategy, right, and then the market. And I feel that that's happening for us. So we're very well positioned to create the kind of value we've created in the past and for other ventures that we're in. I would say, look, I think it's important that your audience, take a look at the fact that we're undervalued today. I mean, you just look at some of our peers, look at what they're doing. They don't have nearly the growth rate. They're obviously, some of them are behemoths in some cases, right? But we just have so much growth opportunity with this company, and it's a huge market. So we just capture a sliver of that market share, and we can build a $100, $200, $300 million company. I mean, that's the growth upside that we have with this current business model. So I would say that, and look at our current value versus our peers. I think today we trade at right at 40-50% below, market cap value on a similar trailing 12 months multiple. If you look at revenue, when compared to our peers, right? So take a look at that. Again, do your homework, right? And look at the management team, look at our background. We've done this before, and we're super excited about doing it again with Digerati Technologies.